Just like every week, I'm here giving you an overview of the upcoming week's scheduled IPOs. Today, this video will give you an introduction of the 6 companies scheduled to go public for the week of August 3rd, and that includes this week's headliner, Rocket Companies. So stay tuned. I'd like to welcome back our subscribers to Healthy, Wealthy, and Wise and our weekly feature, IPO This Week. For anyone new to the channel, my name is Kevin, and every week I give an introduction on the companies that are going public. Plus, I also share upcoming lockup expiration dates, which might give you another opportunity to get into that company that maybe was too pricey for you that first day of trading. I'm here because, like you, I'm interested in investing and always looking for ways to do it better. So I hope you consider subscribing so we can grow this community where we can all share our thoughts and views. Just a quick disclaimer, please know that while this video is meant to be informative, it should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decision. So let's kick off August with medical device maker Acutus Medical, ticker AFIB. If you're familiar with healthcare lingo, you'll like the ticker reads AFIB, which is short for atrial fibrillation, which is a common type of irregular heart rhythm. The company was founded to develop cardiac ablation tools. If you're wondering what cardiac ablation is, it's a procedure to scar or destroy tissue in your heart that's allowing incorrect electric signals to cause an abnormal heart rhythm. Diagnostic catheters are threaded through blood vessels to your heart where they are used to map your heart's electrical signal. Acutus offers an imaging and mapping system that covers the new approach to mapping the drivers and maintainers of cardiac arrhythmias. It was made available in the US in May of 2018. In the first quarter of 2020, there were 31 customer sites with their consoles and workstations, and that was expected to increase to 38 in the second quarter. The estimated value for all forms of heart ablation care in 2019 was around $883 million. According to Markets & Markets' 2020 market research report, the global cardiac ablation market is estimated to have expanded from 2014 to 2019 at a compound annual growth rate of 12.5%. Growth is being driven by a rising elderly population, increasing demand for treatments, increased awareness, and continued technical advancement. The company is planning to use the net proceeds of the IPO to support their commercial expansion, which includes hiring additional commercial staff and to complete all of the ongoing clinical trials. Proposed pricing is between $16 and $18, and trading is expected to begin on Thursday. Next up is BigCommerce out of Austin, Texas, ticker BIGC. The company is an e-commerce platform that serves approximately 60,000 online stores in over 100 countries. While the company initially focused on small businesses when they launched in 2009, they now provide customers of all sizes with a suite of cloud-based e-commerce software solutions, or in more general terms, they offer a cloud-based platform for businesses to create online stores. Some of their more well-known customers include Ben & Jerry's, Skull Candy, and Sony. Currently, the company is concentrating its attention on the sectors of technology, communications and media, financial services, education, automotive, travel and hospitality, retail, and medical and health insurance sectors. BigCommerce's recent financial results show growing top-line revenue and increasing gross profit with a variable gross margin and fluctuating operating losses. The main drivers for growth are an increase in e-commerce capabilities to assist enterprises in automating core business functions, while increasing the leverage firms have as consumers increasingly adopt online shopping for goods and services, things that will only be strengthened by the fallout from the pandemic. According to a 2020 market research report by Grandview Research, the global market for e-commerce software was valued at $6.2 billion in 2019 and is expected to reach $18 billion by 2027, which represents a forecast of a very strong compound annual growth rate of 16.3% from this year through 2027. Keep in mind the company does have some major competitors, which include Salesforce and Shopify. The proposed pricing range is a share price between $18 and $20, with the IPO looking to happen on Tuesday, with trading expected to begin on Wednesday. Alright, next we have IBEX. The company was established to build a broad range of customer service capabilities for companies of all sizes around the world. Currently, most of its established customers being large telecoms. The company is expanding its client base into the new economy with customers like Amazon and Lyft. However, its revenue is still highly concentrated, and its reported largest customer, Frontier Communications, recently filed for Chapter 11. Overall, the company is demonstrating growing top-line revenue, an increase in gross profit and gross margin, and growing operating profit and net income, with much of that growth coming from the new economy customers. Proposed pricing is in the $20 to $22 range, with the IPO occurring on the 6th, with trading beginning on Friday. Up next is health center chain Oak Street Health, ticker OSH, which is founded to develop an integrated and personalized approach to healthcare services for Medicare-eligible individuals utilizing Medicare Advantage through a value-based capitation contract revenue model. For some background, Medicare Advantage is the use of private insurers to deliver services to beneficiaries as compared to the traditional Medicare program. The company currently oversees 85,000 patients and is paid on a per patient per month basis, creating a recurring revenue stream model that management believes incentivizes it to focus on interventions that keep patients healthy while capturing cost savings as a result. While growing quickly, the company is still unprofitable, although it's getting closer to breaking even. They have demonstrated the ability to scale its business model with 90% patient satisfaction in a tough field. They operate in 54 sites across 8 states in the greater Midwest and plan to open 25 new sites per year, including expansion in new markets like Dallas and New York City. The main drivers for this expected growth are predictability in the customer base, more benefits, care coordination, and lower annual healthcare costs. And the federal government encourages the plan because it focuses on cost trend management and not fee-for-service. The proposed pricing range is currently $15 to $17, and we expect the IPO to be priced on August 5th with trading on the 6th. The second biggest offering of this week is Rackspace Technology, ticker RXT, who plan to raise $754 million at a $4.8 billion market cap. The company was founded in 1998 before being taken private by Apollo Global in 2016 and is a leading provider of cloud management services based in San Antonio, Texas. Since its acquisition by Apollo, the firm has transitioned to providing cloud services with a focus on recurring revenue. The company served over 120,000 customers of all sizes across 120 countries in 2018 and 2019, including more than half of the Fortune 100. Rackspace Technology provides multi-cloud services for some of the most well-known infrastructure and software platforms out there, which include Amazon AWS, Google Cloud, Microsoft Azure, VMware, Oracle, and Salesforce. According to a 2020 market research report by Grandview Research, the global market for cloud computing was valued at $266 billion in 2019 and is expected to reach $808 billion by 2027. Rackspace is profitable on an EBIT basis, but margins have fluctuated. As of March 31st of this year, Rackspace had $125 million in cash and $5.5 billion in total liabilities, of which long-term debt was $3.9 billion. They did, however, book $2.5 billion in revenue for the previous 12 months. The company has proposed an offering range of $21 to $24 with the IPO set for Tuesday with trading anticipated on Wednesday. Before we get to the big one, I do want to share a couple of updates on companies we've talked about on previous episodes. The first is ACell, a company that makes surgical soft tissue implants. We mentioned that they decided to postpone the IPO a couple of weeks ago, and then last week, the company opted to withdraw its IPO plans altogether. So that's the first one. The second update is on Harbor Custom Development, HCDI, a residential property developer. They're still out there, but still no confirmed date or reason why for the delay. Now let's get to the big name. I can only guess how many people will be saying that rocket companies will be going to the moon this week. Well, there's no question there will be a lot of focus on their IPO. So many times we talk about companies most people haven't heard of, but not this one. The Detroit company, ticker RKT, was founded in 1985 under its still well-known brand name Quicken Loans, which since has been rebranded to Rocket Loans. The company plans to raise $3.2 billion at a $42 billion market cap in what would be the year's largest IPO so far if priced at the midpoint at a proposed price range of $20 to $22. The company provides U.S. consumers with home mortgages and other loan products via its digital lending platforms. Rocket Company's flagship business, Rocket Mortgage, is the leading online platform for applying for a mortgage, contributing to the company's almost $6 billion in annual revenue with $1.3 billion in earnings. The company has also expanded into real estate services, personal lending, and auto sales with offerings such as AmRock, its title insurance and related services division, Rocket Auto, its auto sales facilitation division, and Rocket Loans, which focuses on personal unsecured loans. The company booked $5.9 billion in revenue for the 12 months ended December 31st, 2019. Rocket has demonstrated growth and profitability, and its share of U.S. mortgage originations grew to 9% in the first quarter of this year, though that is expected to fall in the second quarter. According to a 2020 market research report, The global market for digital lending is forecast to reach $11.6 billion by 2025, which represents a forecasted compound annual growth rate of 20.3% from 2020 to 2025. Currently, the company seems to be performing well during the pandemic and is expanding further into personal and auto loan products. The main factors for this expected growth are a desire by younger demographic consumers to utilize faster and more transparent online processes, along with lower processing costs to lenders. Rocket's recent financial results can be summarized from the registration statement as growing top-line revenue with fluctuating operating profit and margin and variable cash flow. Pricing is expected on Wednesday, with trading to begin on Thursday. Since there really is a lot to talk about with Rocket, I'm planning to complement the overview information in this video with a more comprehensive video later in the week, which I'll make sure to release before the company starts trading. If you don't want to miss it, please turn on your notification bell so you'll see it as soon as it comes out. And finally, for those of you who have an IPO trading strategy looking at lockup expirations, this week we have PPD on August 3rd. For the 4th, we have Casper Sleep, Schrodinger, who's currently trading over 4 times where it initially priced, NextPoint Real Estate Finance, and Beam Therapeutics. And finally, OneWater Marine on August 5th. We also have 2 notable quiet periods ending this week that I want to mention, and I say notable only because we covered these 2 companies earlier on the channel. The first is Nacarta on the 4th and Encino on the 8th. So what are you thinking about any of these companies? Are you looking to get into one or more of them? Let us know in the comments. And if you see something that needs updated from the video, please feel free to add that in the comments as well to update our community. I want my subscribers to get information that's up to date. And again, if you're new here and wondering how to join the community, it's super easy. You join by simply subscribing to the channel. You just got to hit that red subscribe button. So we'll wrap it here for now. Thank you for watching, and until next time, have a great day.